Chewy reported fiscal year 2023 first quarter earnings results. In this video, I'm going to review those earnings results. I'm also going to update my recommendation on Chewy stock. Heading into these earnings results, I had Chewy stock rated as a hold. I did not have it rated as a buy. So after I review the earnings, I will update that recommendation and let you know if there was something in these earnings results that had me upgrade or downgrade my recommendation on Chewy stock. So let's get right into it. Revenue increased by 14.7% to 2.78 billion. Chewy has delivered impressive revenue growth even as economies have reopened. Remember, in the early stages of the pandemic, Chewy benefited because it was an online retailer when the brick and mortar stores were closed, or even if they remained open, people were more hesitant to go shopping in person, so they went to chewy.com more often, and they had a huge burst in customers and revenue. But impressively, they've retained that growth even beyond the pandemic. Now, they did experience a slowdown in customers, which I'll talk about in a little bit here. Diluted earnings per share increased to 5 cents. This was up from 4 cents in the same quarter the prior year. Gross profit margin expanded to 28.4%. This was up by 90 basis points year over year. And I will say that Chewy's management has done an excellent job dealing with the headwinds from rising inflation, rising costs of transportation, rising wages. All of that, they've handled it really well. And their gross profit margin actually expanded from the same quarter last year. Active customers fell by 0.9% to 20.4 million. This is where Chewy's had some difficulty, is in their number of active customers. This has decreased or moderated ever since economic reopening gained momentum. Not so much revenue, but the active customers. So the customers they did keep are spending a lot more money with Chewy. In fact, net sales per active customer increased by 14.8% to $512 for each customer. Now, for a brief moment, I had Chewy stock rated as a buy about a year and a half, maybe 2 years ago. But what had me change and downgrade my recommendation for Chewy stock was when I started seeing data about pets that were adopted during the pandemic. Remember, during the pandemic, pet adoption increased substantially. People were spending more time at home and they wanted the accompaniment of pets. So pet adoption soared. And I thought, you know what? Pets are a long-term commitment. These people who adopted pets, they're going to keep them for, 5, 10, 15, maybe 20 years, right? So I thought that was a very good signal for Chewy stock long term, because these pets are going to generate, they need to eat, they need to have medicine, they need to have items, they need to have a bed and chew toys and all that stuff, right? But what started to trouble me was when the economic reopening started to gain momentum, data started coming out that people were returning their pets to shelters. They were returning their pets. And that really troubled me. That was something I was not expecting to happen in as large numbers that I started to see. So I downgraded my recommendation for Chewy stock. Still, the company has done an excellent job managing the business despite those overarching trends of pet adoption and pet returns and all of that. Just focusing on what they can control, Chewy's management has done an excellent job. Cash flow from operations increased to 148 million. That was up from 82 million in the same quarter last year. Interestingly, Chewy is making its first international expansion, expanding to Canada starting in the third quarter. And I like the way they're doing it. They're starting with one city, Toronto, one of the largest cities in Canada, and they're using third-party logistics. So they're not spending millions and millions of dollars building out their fulfillment network just yet. Right? They're testing the waters. One city with third-party logistics, and if things don't work out the way they thought, if competition is fiercer than they expected, if consumer spending on pets is not as high as they expected, they can pull back and it won't be such a huge mistake. So I like the way they're approaching this decision in expanding to Canada in a incremental approach. The company's forecasting second quarter revenue growth of 13.5%, but for the full year, they're expecting revenue growth of 11%. So that means that for the third and fourth quarter, they're expecting a huge slowdown in revenue growth, below double digits. Because if you've got Q1 revenue of 14.7% growth and Q2 revenue of 13.5% growth, but you're forecasting the full year at 11%, that's lower than what you have so far in the first two quarters. That means the second two quarters has to be below that, likely in the range of 8 to 6% revenue growth in order to complete the year at 11% revenue growth. So to update my recommendation on Chewy stock, I still have it rated as a hold, although Chewy in this quarter made progress towards returning to becoming a buy on my list, but right now it's still a hold. I want to see how the second quarter evolves and if the company changes their outlook for the third and fourth quarter of this year. The lower than first two quarters outlook is a little bit troubling to me. I want to see after the second quarter what they say about the third and fourth quarter and what they say about the expansion in Canada. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.